AI stocks have been the hottest stocks in the stock market for 2025 and 2024. That being said, which of these three AI stocks is the best AI stock to buy for long-term investors? BigBear.ai, C3.ai, or Palantir? I'm surprised Palantir hasn't changed its name to Palantir.ai. I'm going to compare these three AI stocks across several critically important financial metrics, including revenue growth, operating profit margin, and look at their valuations. I'll share with you my proprietary discounted cash flow valuation models for each of these three AI companies, and I'll look at valuation on a multiples basis, looking at the EV to sales ratios. So let's take a look at these AI stocks.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Let's start with the revenue growth. And of course, Palantir is the largest of these companies in terms of total trailing 12-month revenue at just over 3.1 billion in the most recent trailing 12-month period. That's up from over 742 million in 2019. C3.ai has also increased revenue nicely to 390 million, up from 74 million, while BigBear.ai has grown revenue the slowest, up to 160 million, up from around 60 million. In terms of compounded annual revenue growth rates, C3.ai generated 32% revenue growth compounded annually. Palantir generated 31%, so C3.ai and Palantir have generated very similar growth rates since 2019, while BigBear.ai at 15.9% is roughly half that of C3.ai and Palantir. So the next thing I wanted to compare these three on is their operating profit margin, and Palantir has done the best from last, right? You can see in 2019, it had the worst operating profit margin at negative 78%, but has improved it substantially up to 13%, the only one of these three with a positive operating profit margin. BigBear.ai is heading in the wrong direction, falling from a positive 8.7% in 2019 down to negative 28% in the most recent trailing 12-month period. C3.ai has mixed results, right? It was trending in the bad direction up until 2023 at negative 109%, but has improved meaningfully from negative 109 to negative 83. While it's the lowest of the three, it is trending upward, while BigBear.ai is trending downward. Notably, these three are targeting similar markets with their artificial intelligence services, primarily for government markets. For all three of these, they've done a great job in securing government contracts, and every new announcement with a government contract really fuels growth in the stock prices of these three companies. But the bigger opportunity, in my opinion, is enterprise. If these companies can gain a foothold with commercial enterprises, that's a much larger market opportunity. And that's the reason why Palantir stock has absolutely soared in recent months and recent quarters, is because they've done a great job in securing commercial contracts, because that opportunity is much larger. There are more businesses in the world with more spending capital compared to governments, and the government spending that is evident. So they're going after the similar markets, but Palantir is doing the best job in securing those markets. Recently, BigBear.ai has done a good job securing these new deals, and that's why the stock price, you've seen very positive momentum around BigBear.ai as well. So now that we looked at the performance metrics, let's look at valuation. And what you're looking at here is my proprietary discounted cash flow valuation models. I forecast that C3.ai will generate the present value of all of the free cash flow it'll generate between today and the very long run to be just a little under $2.9 billion. The intrinsic value of the stock, or what I believe is a fair value for this business today, is $27.65. That's a little bit more than the current market price of $24.57. Meanwhile, the present value of all of the free cash flow I expect Palantir will generate is over $62 billion. But the intrinsic value per share I calculated for Palantir is $29.83, and the current market price is $136. So according to my discounted cash flow valuation, Palantir stock looks supremely overvalued. Similarly, the present value of all of the free cash flow I expect BigBear.ai will generate is $934 million between today and the very long run. BigBear.ai is still generating significantly negative free cash flows, and the intrinsic value per share I calculated for BigBear.ai is $2.72, while the current market price has soared to $6.79, signaling BigBear.ai is also significantly overvalued at the current market prices. Now, I'm not surprised to see two out of these three companies significantly overvalued. As I mentioned, AI stocks are the hottest stocks in the market, and BigBear.ai and Palantir have been two of the hottest stocks here in recent weeks and recent months. BigBear.ai had several days where the stock price soared by over 20%, and the valuation has soared. In fact, today, BigBear.ai stock price was up over 16%. So I mentioned that I also like to look at valuation on a multiples basis, and the charts that you saw me retrieving are from fiscal.ai. They're my favorite data provider. There's a link in the description for a discount to their service if you want to access charts like these. And when I look at these businesses on an EV to sales ratio forward looking, Palantir stock looks the most expensive at a forward price to sales or forward EV to sales of 73, while BigBear.ai is trading at a forward enterprise value to sales of 10, and C3.ai is trading at a forward enterprise value to sales of 5.5. So these three companies are capitalizing on the AI trend and their stock prices are soaring, especially Palantir, whose valuation has soared. Look at the valuation in previous years. Up until mid 2023, Palantir was trading at a similar valuation to C3.ai, but has really separated itself. Now, some of that is justified because Palantir has significantly outperformed C3.ai in terms of revenue, in terms of new contract signings, in terms of improvements in operating margins, improvements in cash flow from operations, improvements in the backlog of orders. All of the above, nearly every important category, Palantir has blown the other two companies out of the water. They're not even close. In fact, one of the main investment theses for BigBear.ai and C3.ai is that they're junior versions of Palantir and that maybe one day they will become like Palantir. And that's what a lot of investors are excited about with C3.ai and BigBear.ai. That's how excellent Palantir's performance has been in this category. But the stock price has gotten ahead of the value, has gotten ahead of the performance. The stock price, I think, has more than priced in all of that excellent performance. So if I had to pick one out of these three AI stocks to buy right now, I would pick C3.ai as the better stock to buy right now, primarily due to valuation. The valuation of the other two are so incredibly expensive, especially for Palantir, that it makes the company's outperformance a little bit mitigated because of the valuation. So many investors already recognize that outperformance. So I would go with C3.ai if I had to make a choice between these three today. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.